The cryptocurrency market stands as a global playground, operating around the clock without the constraints of central authorities. Picture a vast digital landscape teeming with traders from all corners of the world, exchanging assets at any hour, unlike traditional stock exchanges that adhere to rigid schedules. This decentralized nature fosters a vibrant trading environment fueled by the principles of supply and demand, where prices ebb and flow based on limited availability and market interest. At the heart of cryptocurrency pricing lies a fundamental economic principle: supply and demand. Visualize Bitcoin, for instance, with a cap of 21 million coins, which cultivates an aura of scarcity, driving its value upward as demand surges. Surrounding this narrative are various factors that sway market dynamics, including news cycles, regulatory changes, and an ever-evolving investor sentiment that adds layers of complexity to potential price movements. Traders engage in this dynamic market through two main types of platforms: centralized exchanges, CEXs, and decentralized exchanges, DEXs. Imagine bustling marketplaces like Binance and Coinbase, acting as intermediaries that facilitate transactions while ensuring security and ease of use. In contrast, DEX such as Uniswap and PancakeSwap grant traders the freedom to conduct peer-to-peer transactions without centralized control, embodying the core ethos of cryptocurrency. Diverse participants populate this expansive space, ranging from retail investors seeking personal profit to institutional players like banks and hedge funds diving into the crypto ocean. Whales, holders of massive amounts of cryptocurrency, loom large, their moves able to sway market tides with a flick of their digital wrists. Meanwhile, miners and validators contribute to the ecosystem by securing transactions and maintaining network integrity, illustrating the collaborative effort that fuels the market's heartbeat. Market indicators reign as guiding stars in the volatile cosmos of cryptocurrency. Market capitalization serves as a compass measuring total value, while trading volume illuminates liquidity levels. The elusive Bitcoin dominance reflects BTC's stature compared to its altcoin counterparts, a critical metric for investors navigating potential opportunities within this fertile ground. Price determination unfolds through exchange order books, where buyer and seller bids intertwine, while market sentiment can propel prices into wild fluctuations. Understanding these cycles, from exhilarating bull runs driven by soaring confidence to bear markets steeped in trepidation, enables traders to discern valuable opportunities amidst the noise. Yet the cryptocurrency market is not without its perils. Regulation looms like a storm cloud, with emerging laws capable of destabilizing the landscape. Security risks and market manipulation further complicate this intricate web, reminding traders to navigate with caution. As the crypto landscape continues to evolve, mastering these dynamics becomes essential for any aspiring participant, creating a vivid tapestry of potential rewards and pitfalls.